Hello, welcome back. So, there's something that is common with almost everyone. We all want to win. The competitive spirit burns bright in all of us. But sometimes, winning comes at a very high price. We may think we have won, but in reality, we may turn out to have been the real losers. This phenomenon is known as the winner's curse, and it can seriously affect us as investors. Most of the time, we had a tough time determining the correct market price of the stock we wanted to buy. It may have been because of various different factors like incomplete information or high emotions, etc. We were always in a situation where we were required to guess and simply estimate the real value of the stock based on our limited knowledge. Now, because of this confusion, we ended up overpaying for the stock. We realized this later as the stock gradually fell and we lost money. The process of buying makes us feel like a winner, but ultimately, it proves to be a curse. The most common example of this scenario is IPOs. During an IPO, we have limited or no information about the stock to be listed. So, we have to guess, and once again, estimate its correct market value. With our limited knowledge, we rarely do that correctly, and tend to bid more than the fair market value. As a result, we are allotted the stocks at a high price. The stock finally lists at a much lower price, and we get cursed. The well-informed investor, however, does not subscribe to the IPO, and he actually wins. Winner's curse is mostly prevalent when bubbles in the stock market are created. During these times, investors become irrational and emotional and push prices beyond the true value of stocks. Competitive feelings make sure that most of the investors overestimate the value of stocks. Thus, winner's curse makes sure that at the peak of the bull rally, many investors get trapped in the excitement and lose money. Why does all this happen? Primarily because of competition, buying psychology, bad information, buying pressure, and even simply too much optimism. Can you avoid winner's curse and protect your money? Well, yes, it's pretty simple. 1. Try to find the real value of stocks. If you can't, just forget about buying them. Don't ever try to guess or estimate the real values. 2. Do not buy just because buying makes you feel like a winner or like, I did it. It's a fun feeling, but it may betray you in the long run. 3. Realize that buying a stock is not a competition. It's best to avoid when others are competing to buy. They will lose their money, but you can stay out of it and stay safe. These simple things can save you so much. I'll see you again with our next video on projection bias, where we will understand how an investor who tries to project a future based on the recent past totally ignores the distant past and thus loses money. Until then.